Job seekers spent the day at the Coast to Coast Career Fair at 3rd and Chestnut, filling out applications and meeting recruiters. There were a variety of companies represented, from insurance, the military, and some universities. Hopefully, some of these people found valuable job leads today. Pennsylvania's unemployment rate is above 8%. The Fox 29 Job Shop is always open online at myfoxphilly.com. The job of the day is an overnight front desk supervisor for Lowe's Business Hotel in Center City. You need to have 3 years management experience. For more information, head to myfoxphilly.com. It's one of the most exciting and scariest times of a person's life, buying their first home. With the housing market in turmoil for so many years, you might be confused about the rules. And just to throw a curveball at you, there are some new rules you're going to need to be aware of, ones your friends and parents didn't even have to know. So joining me now is CPA Brian C. Greenberg with some of the things that home buyers need to be aware of. Thanks for being with us.
Pleasure, Lauren.
First thing I want to talk about is FHA loans, which are loans from the federal government. What are the changes with them?
Well, the big problem we've had, as you know, is this disaster in the economy. People can't put money down to buy a conventional loan through Fannie Mae and Freddie Mac. FHA is now another government alternative. Instead of having to put down 10 to 20%, you only have to put down 3.5% when you buy a house today with FHA lending.
But that's going to change.
Well,
it's going to change from 3.5%.
It's going to 3.5% going forward. But in addition to that, there's another cost involved, and that's called mortgage insurance. Because since the government's only requiring you to put down so little, they want to charge you an insurance fee in the event that you default on that mortgage. And that's going to be another 1% over the cost of your mortgage.
Is that an advantage for people, especially if they don't have great credit, to get the FHA loan?
Well, they'll go down as low as 640 on your FICO. But the problem is, it's not so much about the credit issue, it's the fact that you're putting down so little money. And given the fact that we've had this housing crisis where so many people walked away from their homes and are walking away now, we're setting up a problem if, in the fact, we do have a double-dip recession. What's going to happen to these people who, when they're looking at their houses upside down and bought one of these FHA mortgages, they're going to walk away again? Yeah,
I mean, it's sort of contradictory of what the whole government's about right now, and we're trying to get people to not be irresponsible with their money, allowing for it. And it's also a red flag for sellers out there. I have to move along, though, to origination fees, which are going to change mortgage brokers. So what does that mean for the home buyer?
Well, that's a very good question. It's supposed to help them, and that they're now legislating how much a mortgage broker can make when they place you in a mortgage. What it in fact will do is it'll make the mortgage broker an extinct species. They'll no longer be around. They're just going to have banks and borrowers. And supposedly that will reflect with lower costs when you go to buy a house. But now when it's only a few banks that are servicing and delivering mortgages, well, that gives them all the tools in the game, and it's a monopoly, and it's a very bad problem ultimately for the consumer.
Plus, if you don't know anything, it's hard to negotiate with a bank.
Exactly. There's no one looking out for you. You're going directly into the lines then.
Well, some would say that mortgage brokers aren't exactly looking out for you either. But let's move on to the third one, and that is over time the guidelines are going to be stricter in terms of lending. And so we're not talking about those government loans, but we're talking about regular, from any mortgage company or a bank. This really idea of putting 20% down.
Well, as you know, Fannie Mae and Freddie Mac have been a disaster. They're illiquid, they're gone broke, and the government was trying to ease its way out of the mortgage business. So what the Treasury is recommending right now is a 10% minimum for all purchases of mortgages. And some people in Congress are calling for a 20% minimum down. So this era of 3.5% down, once that's gone and this legislation is in place, people are going to have to put up a lot of money in order to buy a house.
Is that the responsible thing to do, though, 20% down, considering what happened?
Sure, but that's long after the horse left that barn, and now we're left with all these bankrupt mortgages that you and I, the taxpayer, are now footing the bill for.
And they don't have those tax credits anymore for those home buyers that we had last year, so it's all really difficult. Okay, Brian, thank you so much for coming in. We appreciate it. Okay, check your cabinets before you make your next peanut butter and jelly sandwich, because Skippy's